Hello, everyone, and welcome back to this week's episode of That Indian Podcast. I'm your host, Jay, and today I am joined by someone who is very special. Most people look at careers in straight lines, from college to job to promotions, but some people build in layers: technology, finance, research, business, and investing all at the same time. Today's guest is someone who did not wait for permission to start building. He's a technologist by choice, an entrepreneur by heart, and someone who spent years studying systems, whether it's AI, business, or financial markets. So please join me in welcoming Raj Chavan. Raj, welcome to the podcast. How are you doing?
You very much, Jay. How are you doing?
I'm doing good.
Yeah,
Thank you for
glad to be
joining
here
us.
and I'm excited as well. Thank you very
It's
much
my
for
pleasure.
inviting me here.
So, Raj, when someone looks at your journey from computer science to startups to finance, all at the same time working at different MNCs, it doesn't feel accidental. It feels like a career path that you have put a lot of thought into. So, take us back to the beginning. What early experiences shaped how you think about work and how you started building things?
Yeah, sure, Sanjay. So, I would like say from I mean about myself, so the way I began was I was a curious person, or I would say I was a curious kid to begin with. I always had the curiosity of how things worked, about how whenever I saw something new, I had always questions behind it. Either I would ask my friends, I would ask my parents, I would ask my teachers, or my friends' parents. Whenever I went to their homes, I saw something new. Okay, how does this work? So I think that was the prerequisite which I already had. I would say a natural born talent to being curious about almost everything. So whenever I came across something new, it was just that I wanted to know if this is something that can, if something that can be built, right? So naturally, my parents thought, okay, I have a aptitude towards engineering, so they pushed me. Okay, Raj, you should, pursue engineering, just like every parents in our house just push up to be an engineer or doctor. So they pushed me towards engineering, and so when I was like in my early the education side, I would say I was more on the studious side of things. So I had kind of friends who were okay pushing me, let's do this, let's do that. We always had a curious bunch of friends within my close circles. And I think that engineering taught me the technical side. It gave me the aptitude to understand the STEM side of things, the science, the design principles, and the way the foundation should be laid out. So as I graduated and as I got my first job, a lot of people don't realize this, but most of our computer science, the information technology, the IT industry as such, uh, it revolves around finance domain. I realized that like when I entered the employment mode, or I would say as I joined the workforce, I realized that everything, if you look at all the applications that are built, maybe it could be Oracle, it could be SAP, it could be Microsoft, it could be any of these big tech. A lot of them, their core applications are always revolving the finance industry. And the thing is that we, being engineers, we are never taught finance, or we lack the financial literacy. At least that's the I mean the word going around with engineers, that we don't have the financial literacy to work on finance or something like that. So it and we have to take it up on our own, or maybe some we need a mentor to guide us through or navigate through the financial industry, or the fundamentals of finance and things like that. So when you are beginning your career, maybe from even as a tech person, and then as you navigate, you feel that okay, you're not having the financial literacy which you have to overcome. And this was not just with me, this was, I think, with all my colleagues who had joined from a technical background into the finance industry, right? And when you're faced with this kind of things, you feel that, oh, you're not good enough, you're not like having the aptitude for finance, and first time you face that setback, I would say it is a kind of a quarter life crisis, where neither your career is going anywhere, or your whatever skills that you learned for so many years are not being used in the right way. So that's when I thought I should pick up finance really seriously, and I should actually know what I'm working on. See, I love my work. Okay, like that's the first foundation of what you do. Like that keeps you going. If you don't like what you do, obviously you will not enjoy the process itself, right? So I think understanding finance, understanding the concepts of finance, applying it to your particular project, to your industry, that kind of helps you navigate, and it gives you a kind of I would say it makes you a better decision maker. It makes
Mhm.
you a better person when it comes to making decisions with regards to technology and finance. Like I could give you one clear example. Have you must have heard about the Concorde, the supersonic jet, right? Like it was a technological marvel, but still it was a commercial failure. Okay, like it failed not because of the technology, it failed because it could not be commercialized the way airlines could be commercialized. Like we had supersonic travel in the 1970s, but we don't have it right now. Until date, we could not have like if you have that kind of technology, could travel from let's say India to New York or US in like within few hours instead of like 15-20 hours. You could just finish that journey within 6-7 hours, right? That's a technology we already had built in the 1970s, right, as humans. But the reason why technologies or really good technology don't pick up is because maybe the financial part doesn't, it gets left out. How that could be made feasible, or how that could be made um, I mean, sold for masses, right? So that is something engineers, I would say, have to learn. Like we can innovate, but at the same time, we have to make it financially sustainable for it to be sold off. And that's kind of that kind of gave birth to my entrepreneurial mind. I would say that's where I thought, okay, now I understand finance, I understand the engineering part of things. Let's go with getting ownership of things, right? And but before I went into the entrepreneurial route, I think I tried some of the consulting route as well, because that gave me an insights about how I could better understand the industries out there, right? Like, see, if you cannot directly jump from just being an engineer and a finance expert and becoming an entrepreneur directly. You will have to basically have a layer where you need to self reflect, and you need to understand where you stand, right, in the industrial, in the whole game, where exactly you're standing. So I did try consulting for a while, and consulting did help me to serve the industries better. See, look at, like, we have a lot of industries around. Like we have manufacturing, we have telecom, we have mining, metals, we have logistics, right? So their work is not technology, right? What is their work? Their work is to serve their customers better. And through consulting, I think I found that our work is to help them adopt technology so that they could serve their customers better eventually. So their work was not technology, right? Like if you look at telecom is like it has to serve you, like whichever telecoms operate in India or in the world, like their work is to serve their end users. But to help them adopt the right technology, to help them adopt and implement the right practices, from the technical perspective, from the financial perspective, and to make it feasible for their end users, is the work of a consultant. So I would say consulting kind of bridges the gap between engineering, finance, and business. And that's when I think my profile as an entrepreneur started shaping up. And that's when I started with my first company called Drop Technologies, and we entered the renewable energy space, the IoT space. Internet of Things was kind of booming up back then. We entered into implementation of financial systems like ERP, EPM. That was my area of expertise back then, right? It still is, and I do implement that as well. And that's how I got introduced to Oracle and companies that implement financial applications for other large organizations, Fortune 500 organizations. And I got to travel a lot during consulting. I implemented projects across 19 countries globally. So it gave me a very diverse perspective on how various cultures operate, how you can negotiate with them, how you can talk with them, how you can make them understand, how to globally bring them to the same level of understanding that technology is. So this has been my kind of journey right now. Right now I'm based in Dubai, so it's been another adventure for me as well, from career, from overall learning perspective. So this has been my journey just in short.
That's an amazing perspective to have, and like I'm really happy that you've done so many things in like very brief period of time. It's not a lot of people get to try all these different things in a single career, and I'm really happy for that. And I hope a lot of people learn from this that this is possible. Like when you strive for it, you can actually try out a lot of things that you actually want. Now, I would like to ask about the fact that you have worked in different MNCs would have probably helped you in your journey as an entrepreneur, as a consultant, and in different parts of life. So, what part of corporate life do people often underestimate, and what part of corporate life that you've learned helped you in different other parts of your life, like entrepreneurship and consulting and other different parts?
Yeah, sure. So Sanjay, I actually, I think when it comes to working in corporate, I think I covered all the spectrum.
Mhm.
I work for a small corporate of a 50 people company. I work for a mid-size with like 1,000 people company, and I also worked for a big tech, like where you have more than 100,000 people working. So I think every corporate taught me few things quite differently. Like the smaller companies are more agile. They are more fast in delivering, fast in decision making. You have direct access to your founders, or I would say the VPs or senior VPs, right? You are directly talking to them almost on a daily basis. When it comes to mid-size, I feel that the hierarchy kind of expands a lot, where your visibility reduces slightly, but you still have a good amount of visibility, and you get good projects. You kind of grow understanding and managing slightly larger team than what you were doing previously. You have better access to the market, I would say, or a higher level of access. People recognize you as a brand rather than an individual person, whereas in a small corporate or a small company of maybe 50 people, people or your customers recognize you as a person. But when you grow, people recognize you from the company that you're working for. But as you move further up, like let's say for a company which is like 100,000 people company, let's say when you're working for Oracle or Microsoft or maybe IBM, there you're identified by the tag that you're working for one of the big tech, where your visibility is kind of very low. But at the same time, you're part of a machine, like you're just part of a small part of a big machine. But at the same time, the exposure that you get, the network that you can build there is quite massive. And what I would say is that as organizations grow, they become process oriented, and I feel that is important because processes last. Maybe the other things may not last. Let's say for example, see a lot of economy that is being going out there, like let's say in the last 20, 15, 20 years, right? There has been a lot of economic turmoils everywhere. So I would say as the bigger companies have a strong process, they factor in all these kind of obstacles that may or may not come up. Like if you look at, let's say during COVID or during the 2008 crisis, or even during the dot-com bust of 99 or 2000, bigger corporates survived. Why? Because they had the processes, they had planned, or they had things in place which kind of let them see that if something goes wrong, we have a backup plan, and we have the funds, we have the cash flow, we have things to keep up with the runway. They had a good amount of runway to let until the phase is gone, right? So even during COVID, like a lot of companies which were like really big, they did survive, right? But a lot of mid-size and small companies kind of had to shut shop, right? Because you don't have the process in place. You're still figuring out what's your niche area, what is your market presence, what is your so that this is where MNCs kind of give you a picture. Different MNCs give different picture, of course, depending on the size. But yeah, they thought that the process works, and if you have a process in place, if you have a backup plan in place, you can survive any economic downfall, whatever happens, and the pandemic comes up, recession comes up, something like that. I mean, so this is what I have learned. I mean, that process does matter. Everyone should have the FP&A team, that's called like the financial planning and analytics team of every company, does factor in all these things, which probably a small company may not, right? So this is a very important lesson for me as an entrepreneur, to have a contingency in place as well. If things don't work out or if something goes south. Okay? So this is something I learned a lot from working across my corporate life.
That's a great point, Raj. And one thing I could not like had noticed in your career is that you always strive for more. Especially like a lot of our audience are like young people who just started their careers. Thinking about
Mhm.
that, it's often easy to fall in a trap where you get a job, you look for promotions in the job, you try to work harder in that particular job, and your career just becomes linear. But like in your case, I see that you always strive for more. You always explored different opportunities, whether like you said, exploring about finance or starting trying to be an entrepreneur or moving to consulting. These are different things that you don't get just by being doing a job. You have to strive for it. So, what was the motivation for you to start doing it, and what advice do you have for people in like their early stages of their career?
Yeah, sure. So this could be something I will have to take back way back. Like so when I used to like there was a time when I used to like when I was a kid when I used to we all used to play PC games. Okay, so I remember when when we used to play, there was a game called NFS, which Need for Speed. Okay,
Right.
but me and my brother used to play, and we had like a range of cars in the a range of cars, as in you have a McLaren, you have a Ferrari, you have a BMW, you have a Mercedes, all these cool cars you have. So me and my brother used to play, but we never, saw these cars on the road. And then once in a while, we used to see these cars. I used to ask my friends or my parents, why doesn't everybody have these cars? That's my dad said, these are the cars which the super rich buy. This is a car which that's so I know I wanted I always had. So that's when the ambition started developing within me, that I need to have all these cars in Need for Speed. I need to have them in my garage somewhere. you know so I think I'll work towards it. But then I realized, a job or just a thing like will not give you that kind of success. This is a symbol of success, that you're owning a Porsche or you're owning a BMW. It's like, you're having you have actually made it, right? You have made it financially, you've made through being, but this is not a journey which you can develop as you have to plan for these things, right? Definitely you need to create your profile, or you need to position yourself to get there, right? To I'm not saying that I'm materialistic or something, but as you realize a few things like that, you get to know that, okay, this is where your ambitions are. You want to like really taste, you get the taste of success. When you get a taste of success like that, you start really working towards it, right? So I would say that was the beginning for me, right? To get something, okay, that's what I started chasing. And as I grew, I realized, okay, it's actually really difficult. It's not something that you can just achieve in a year or two. It takes many years to build something out. And as you build, I feel that you have to take early decisions where you want to be. And of course, you have to improvise upon that. So people in there, maybe people who are just starting out, I would say that be ambitious, like be really hungry, like don't let that hunger die. Just keep your goal and just work towards it. Okay, I think everyone should like just go after what they want. And the thing is that if it is not working out, you need to try something else. Like, so you need to know when to quit as well. Like, you should not, if things are not working out, you should make that changes in your life or in your career or in your way of working, which can actually give you success, which could put you in the right path again. Or see, there's nothing like a right path, but maybe the path which you want to be in, right? So that's how what I did. So I usually follow this 1,000 day principle. Okay, like
Mhm.
so when I was in my management studies, there's something called as 1,000 day principle. Like, if you really want to be world class as anything, you should do the same thing for 1,000 days. Okay, this is something I learned from some of my mentors also. Like, whether it's a job, you'll not believe, even the Olympics, right? The people who train for Olympics, Olympics are 4 years apart. So 4 years is like almost, see, 1,000 days is 2.5 years, or I would say 3 years, almost 3 years. So if you train for Olympics, if you're doing the same thing day in and day out for 1,000 days, you're kind of becoming really world class at it. Okay, even if you're not having that skill from the beginning, but doing it every day for 1,000 days, you are superb at it. This is something, it's a, I would say, it's not something uh, necessary, but it's psychologically said that you're tuning up your mind to success, right? It could be like you want to learn a new skill. It could be like you want to try a new business. People just do it for a few months and they quit. But I feel that you should give some time to it. You should see whether you're going where you're going with it, right? Because in 1,000 days, if you're not able to make it, then you need to make a decision that this is something I don't think this is right for me, and you should, like, restart the journey, right? I mean, this is what I have followed. So even if you're on a new job or something like that, I mean, don't quit your job just because, oh, I don't like this company, or I don't have this. Try it out for 1,000 days. You will become expert at it. You will upskill yourself. You will become master at it, right? And then maybe you can, once you're really master, that's when your recognition grows. So this is what I followed. If you see my career trajectory, at least I tried any new skill for 1,000 days, whether it's working out, whether it's going to the gym, whether it's going to the trying a new sport, trying maybe a new programming language, trying a new role in a new company, something like that. So this is something I advise to my younger generation, that try this principle out as well.
That's a beautiful point, Raj. And seeing people like you, seeing people who have shaped their careers is an inspiration to all of us to start striving for things like that. And thank you for doing what you did. And that's an amazing point that you put. Now, I'd like to talk about your journey as an entrepreneur. I understand that you have co-founded three companies, and it was across very different domains also. So, what did it take to find like co-found these companies like across different domains, and they also have different sets of knowledge that you have to have in each of these companies. So, take us through your journey as an entrepreneur, like your success, your failure, and things like that.
Yeah, sure. So my first company I founded in 2015. It was Pearl Rock Technologies. It still is active at the moment. And I was just 23 years old, and there was a boom for solar and implementation projects across the world. Like everyone was going for renewable energy. People wanted to move to IoT. People wanted to get into how things can be integrated. So I thought, how can I combine my software skills with IoT and renewable energy? How I can form a system with that. So we started working, we started researching, I got some inputs from my mentors, how I can build systems, how I can implement projects better, maybe in India, in the Middle East, in Europe. So this was like the market I chose with, and I started I just took some seed capital and from my dad and from my other things, and I started with this, and we were having success, and then we expanded into some other areas like building software applications as well for the renewable energy industry, and then trying to expand upon it. Within 2 years, I felt that I should also have a good marketing uh, skill set, and that's when one of my batchmate, he wanted to start a digital marketing company in India, and digital marketing had just kind of it was already there, but it had to be more refined or more process oriented, and it had to be like kind of where people adopted digital marketing, they understood what it is. So my second company I founded in 2017. It was called Vimpra Digital, where we started with digital marketing. And I would say I was not a really great marketer, but things like when you are pushed towards working towards it, you really start becoming or understanding the sales cycle, how companies market, how the digital marketing works, how the AdWords, how the keywords, how Google does all the level of the SEOs and all that thing. So that kind of helped my first company, as well as as I was learning from my second company the uh, how business development should be done, right? Because I was interacting with a lot of customers from various industries. It could be real estate, it could be something like telecom, it could be something, I was expanding from restaurants and all that. So I was understanding how customer acquisition is working, how companies are managing their customers. As I said, we are helping companies with technology to help their customers better. Ultimately, that was the role we were playing, right? And that's where we realized, okay, this is how the industry is working. As consultant in marketing or in technology, we are helping them adopt better solutions like a CRM. It could be from a Salesforce, or it could be some small CRM application which can help our customers, get data driven for their customers, right? So that's eventually you're making the customer experience better, right? The CX, that is called today, it's called CX, but earlier it was customer relationship management. Now Oracle or other companies call it customer experience. So how that can be made better, because ultimately they are the ones where you're getting your revenue from. And I operated it for a few years. And during COVID, I think we had the major setback where I felt, we a lot of our, because as I said, where we're growing, we didn't have the strategy for maybe the rainy day. So that kind of hit our revenues, hit our customers, and where our so I had to like take a break from entrepreneurship and again move back into employment mode. That's where I joined Oracle, and my co-founder also, he joined other tech company in the UK, and we basically again restarted our journey back, learning how other companies are working, getting exposure to the new technologies, getting exposure to the cloud, understanding the how cloud is adopted, and how AI had just picked up. Maybe the Gen AI applications had started coming up. How that can be implemented, and since I was part of Oracle, I got to understand how Oracle is implementing cloud solutions for its customers. The learnings from my entrepreneurial journey kind of helped my help my again. I was back into the tech and the consulting domain again. and it kind of gave me again a wider exposure to various other technologies, okay, apart from just finance and CX, and how other things, how supply chain works, how the grand things work when it comes to the enterprise applications, right? So that is something, and obviously Oracle has a good network, good partners around which implement it globally. So I got part of, like, I was part of the North American applications team, later on part of the India team, then part of implementations across Europe and Middle East. So I got a good exposure there. I got a good network of friends. I have colleagues who became my good friends as well, and they still are, like, where we connect with a lot of them. We discuss a lot of other things. And this is how my entrepreneurial journey shaped out. Then last year, I think I had another idea where, I thought my brother is a drone pilot, so he said, we should have, AI in drones, something like that. We should make them. Because I see that like nowadays drones are like, they are in a way. What do you say? You have to do a lot of manual adjustments. Even if you want to fly a drone, it's not something where a non-tech person can learn easily, or people who are maybe not used to flying or drone. You have to do a lot of manual adjustments. You have to take them up to an altitude. You have to keep the camera facing towards you. You have to make point you as a center and make a radius, and make the drone shoot a circular shot with you, right? That takes quite a while. So I thought, these things could be automated, maybe if you could, because it's just a series of parameters that you're setting, right? If you can just talk to the drone and maybe convert that into parameterized thing, it could be something that could be worked upon, right? So that's when the idea of drone IO came up. So drone IO is like, we started it under my original company Poldraw, where we are currently researching on how we can build better drones, better application for it, where you can my vision is basically to build a consumer drone which could be um used by anyone, like used by a person who has never flown a drone, just talk to the drone, take my photograph or something like that. So we are just trying to build a very simple use case with this, and just trying to, we are just doing R&D, and my brother's involved in this, and then we have a couple of other folks who are trying to help us out, how we can get this up and running, how we can model the drone in a very small way. It can be like so this is just something that interests me. I mean, after a point, I was thinking of, I should work on things which are driving me, rather than just, keep up with the regular things that I work upon. So this is one of the entrepreneurial venture that I started just a year back. Not even a year back. It's just been 7, 8 months actually. So this is something I'm working towards.
That's a beautiful journey, Raj. And
Thank
something
you.
I want to ask at this stage is that was it harder to find your first company, or was it hard to stay consistent over the decade or throughout the years?
So I would say the first companies you found, right? If you find, I mean, you start. It's like, it's out of excitement.
Hmm.
So you don't know the best way to do things, right? You just try your way based on whatever knowledge you have prior to it, whatever experiences you have prior to working on this. So it takes time to build upon your knowledge base, your expertise. You're not optimized for success, I would say. So our first company was, I would say, it developed. Uh, I would say it forced me to come out of my comfort zone, definitely, but at the same time, it also pushed me towards developing a process for my second company, right? And eventually, what I found is, it's kind of a learning, all the learnings that I took from my previous companies, the product development, the kind of engineering principles that we put in, the marketing, the sales, the whole customer acquisition thing, that who can be a target audience, all that shaped me, definitely. So this led to a discipline, a consistency, and the process kind of became part of it. So definitely, it's not like you start something and you might get success in your first attempt. I mean, yeah, a lot of people do get success in their first attempt, but I feel that once, uh, because in the earlier days, you definitely make a lot of mistakes which cost you money, which cost your time, energy, resources, everything, right? But that's the learning curve, because those things are kind of a learning for you, but at the same time, they are also something which uh, you should take it up with you, and you should kind of build upon yourself. And that's when you become disciplined, you become really good at what you're doing, you become optimized for success, and you position yourself for success. So that's how my journey has been, at least.
Okay. So that's a very interesting point. Like something that I think about right now is that As a founder, the journey is not always up. It's not always you're getting success immediately. There are a lot of paths where the growth is invisible. There are a lot of paths, like you said, where you keep working maybe for 1,000 days where you don't see much growth. But then there comes a point where the growth is exponential and you blow up. How do you wait for this and how do you handle setbacks? Like you said, COVID was a big setback for your company, Vimpra, and you had to make a choice. You made the choice of going back to corporate, make starting over again. But often those choices are hard, and people often like don't always end up making the right choices. How do you know when to quit and like when to come back or when to start over again?
I would say that some of it is gut feeling. Okay, I mean it comes with like you know that nothing is happening. See, it's possible that you are just very close to success, but you are just giving up. It is possible. Okay, I'm not saying that. I'm not denying that fact. But you get a gut feeling that this is going nowhere, right? I mean, you get you see the industry changing, right? You see the industry adopting new tech, whether you and you're still stuck with the old tech, right? You see that change happening. At least I saw when I started my career, there was like hardly any cloud projects around. There was no AI at all. So I saw cloud adoption happen over the last 15 years. You know, cloud got adopted. People moved from on-prem to cloud. So because when I started my journey, I was an infrastructure engineer, right? I was setting up servers, configuring the OS, Linux, and all those things, and then putting up the applications. You know, the infra level work that you do for an organization. So as cloud came, obviously you don't need an infra engineer. You have to pivot your career. So you will understand that when you're about to get obsolete, you have to pivot your career and move into something else. Like you have to move into software engineering and then move into other things. You know, so as software engineers are also like obviously software engineers are not getting obsolete, but with AI their job is kind of becoming the repetitive work is kind of getting away, right? So that's the reason software engineers still involved in the repetitive work are kind of being phased out, right? So you need to make that decision before the industry makes that decision for you, whether you should pivot your career, you should quit at the right moment. So that kind of you get that kind of sense that things are not working out because right now whatever you were working on has become obsolete. So it's always and I think every 5 to 7 years this cycle happens. At least I have seen it happen twice in my career. I've seen it happen with on-prem to cloud and now with AI and everything, so at least I've seen these two cycles. And when I speak to my seniors, they have seen much other cycles where things move from totally manual things into the internet, accessing applications over this, when even internet was kind of feared in that, okay, why should we put our data on the internet, right? Or something like that. Why should we even have a website? We don't want to have a website. So, things have been changing over the years. So definitely things you need to make that decision based on your judgment. One is and definitely you get that gut feeling, I feel. Every entrepreneur who is working on any idea who usually get that feel, okay, I mean, this is where I'm not, this things are not working out well. I should go back to the industry, relearn, upskill myself again, and maybe come back after a few years. And then maybe things, with this learnings and with this things, I can start with a new process and new or something that will be, start something that will sustain. But obviously you have to also have that plan to exit. And it should not be your ego driving you, that okay, how can I not see this? Okay, it's fine. I mean, you have to not be very egocentric at this. You should be more of a numbers guy, like, or a data driven person or a data driven decision maker who can actually take the right decisions at the right time. So look at the data, look at your own judgment, what you feel. Is it going to make, are you going to make it? If you're not going to make it, I think that's a time when you actually move out and, restart your things from scratch, right? That's at least that was what I would suggest anyone or any entrepreneur doing anything. And if things are not working out, just go back to the fundamentals, think through, and then come back with, some new experiences. That's how your journey should be.
That's great. It's important to understand instinct as an important part as an entrepreneur.
Mhm.
And also, like you said, it's important to understand that setbacks and failures are also part of the journey of being an entrepreneur. And you handled it really well. And I hope that serves as an inspiration for people looking to make certain choices in their lives. So now let's talk about investing because most people treat it as a separate thing from their career growth. And like you said, finance is an important part of any field that we work on. So when did you start investing? When did you start learning about finance, and how has this shaped your journey?
So as I would again go back to my education, where as you said, when you graduate as an engineer, you have very low financial literacy, apart from just making money here and there, spending here and there on things that you know. Okay. Um, so my journey as finance started because I was pushed into the finance industry. Um,
Okay.
uh, or I would say the investing part of it started around the same time. So my first job, again, it was into a company which used to buy metals, and they used to basically refine it to manufacture overhead transmission electric cables, right? So they used to buy a bulk of aluminum from other refiners and all that. And that's where, I was kind of managing the Oracle applications there. It was my first job, infra as well as managing, understanding the Oracle applications, kind of getting the, and that's where they used to import metal price. So in Oracle, right, you can feed in metal prices. You can actually get the live prices from Reuters. There's a Reuters application which actually connects with your ERP, and you can fetch in the live prices, and then you can fix some prices well in hand before the prices fall or go up, right? Just to hedge your pricing. So this company used to like just import aluminum and from other refiners and smelters, and then they used to manufacture. So they used to fix the pricing. And I used to realize, okay, whenever the price is really going high, it's used to be actually profitable for the company who's supplying aluminum, right? The metal aluminum to these companies. So, and then I used to realize, okay, the stock price is also varying because of the pricing difference that's happening. And that's where I actually started trading in stocks with metal companies. Okay, I started with the metal industry because that's the industry I started understanding a bit well because of the domain that I was working in. Although I'm in the IT domain, but at the same time, through the data that I'm kind of working on, I felt that, okay, based on the trend, based on the market prices of the metals, the seller, the vendor is actually getting profit because of that. So what I realized is, the cost of maybe the manufacturing for them, or the cost of refining for them, is kind of fixed, because they see, metal industry is one of the oldest industry out there, and it's as old as humans. I think from the Iron Age, humans started using metals, melting metals, trying to make weapons, trying to make houses, trying to make structures which are stronger, right? So metal industry has been around for a long time, and the process of refining metals is kind of, the cost is fixed. So now the only variable that lasts is remains as basically the global pricing, right? And if you know the global pricing going up, going down, is actually profitable for the company which is actually refining that metal. So I kind of started researching on companies which deal with aluminum, with, let's say, iron, steel, or maybe the companies like dealing in copper, zinc, silver. No, these are like the widely used metals. You need to understand their use cases as well, right? Of course, like I knew the aluminum use cases being used by my company for manufacturing cables and other uh, car wheels and something like that. So similarly, if you know the use cases of other metals, you know that these companies will require a lot of metals for their products. So they are definitely going to buy them from their refiners. So if you know that if the pricing is going up, these companies, the share price is definitely going to go up. So when you start investing in these companies, obviously you are in for the game, you're in for the long term, and you're going to profit. So this is where actually I started investing from, and I started buying stocks. I mean, I did not immediately go to mutual funds, but I started buying stocks. And even when I was doing my post graduation in finance, during my management studies, like during my MBA and all, I had good professors and good circle of friends who used to invest. So we had a special chapter in that called investment management. So that's where I really understood that investing is not just to make wealth; it's actually to protect your wealth. Protect your wealth against inflation. See, regardless of whichever country you live in, whether you're in India, you're in US, Europe, Middle East, okay, there is inflation. There is always going to be inflation, and inflation is destroying the value of your wealth, of your money, whatever you have. It's actually destroying the value. What you could buy with 1 rupee or 1 dirham or $1 is not what maybe what you could buy yesterday or maybe a year back is not the same that you can buy right now, right? Because the value of money goes down, or I would say the value of the things that you're buying is kind of you're not getting the same value but that you got in the past. So investing is not something you should just do to make money. It is something you should do to protect your money against inflation. This is the first principle of investing. The rest all is secondary. Like if you're able to hedge, or if you're able to protect your funds, your wealth from inflation, I think you have a successful investor, regardless of whether you create big, massive wealth out of it. That's a secondary task. But your first task is, are you making enough to overcome inflation? You understand? So this
Hmm.
is this is this is where things should really start with. I understood it at a later point of time. I thought I was investing, but and that's when I really started taking investment management a bit seriously, and that's where I spoke with a lot of my friends. They guided me. Okay, Raj, you should start with mutual funds. You should start with this. You should start with that. I also started with mutual funds. I had my mutual funds for 3 years. Um, but over a period of time, I realized, mutual funds are still, again, not, it's like, you're not in the driving seat. You're somebody else is doing it for you. And again, that is a human who's doing it. It's not somebody who is very divine, who can always make you give you some returns, fixed returns. Okay, it is again market dependent, and the person who's doing it is doing it basically just to make himself money, right? Ultimately, a fund manager, I used to speak with some of my fund managers, guys, what are you doing? Like, how are you investing? What is the principle behind it? Now, they will not give you the whole detail, but then when I used to research, see, because I had inherent knowledge about the metal industry, at least I understood that metal market is doing well. And when my fund manager used to sell the portfolio at the wrong time, I used to like get really furious. Buddy, this is like, this is not the way. I mean, come on. I think this is, and when the market used to go up, my mutual funds are kind of already reshuffled. Then I realized, they are just doing it just to make maybe get commission from their deals. They were not least interested in giving or making you rich or making you profitable, right? So this is a hard truth. I realized. I know fund managers will be like really furious watching this, but this is how it's again, they also have to run their homes, they need commissions to make earning for themselves. But it's not in your favor, because if you see, if you can understand the market a bit better, or see, I'm not claiming that I understand the whole market. I understand few sectors. I understand power, I understand metals, I understand oil and power. I understand a bit less than metals. Metals is something I understand much better. So I know that, okay, if this is really going up, why should my fund manager exit from that particular stock, or that particular why you should reshuffle the portfolio, right? So that's when I actually started taking things in my own hands. Okay, I really became serious. So this is in 2018 when I shut down all my mutual funds. Okay, I right now at the moment I don't have a single mutual fund, and I went 100% for equity, and I focused only on the sectors which I knew, and because I was really confident that if I understand just one or two sectors, and if I follow the stocks, I don't want to have like hundreds of stocks. Even if I have 5 to 6 stocks which are really giving me good returns, and by the way, when I mean good returns, I mean 70-80% returns. That's the returns I should be making from the stocks. And I felt that I could make that from metals, oil, and power stocks. And I think my power stocks is something, I would say it's not something maybe by chance, but I think some of my power stocks have given me almost 1,000% returns. Like, for example, CG Power, it gave me, but anyway, that was a point. It's a very rare opportunity, where I think I just entered at the dip. And because see, most of these stocks are cyclic, whether it's power, whether it's oil, whether it's metals, right? So if you understand metal pricing cycle, you can enter at the dip and you can exit at the top, right? But there are few metal stocks which are ever increasing. Look at stocks like Hindalco or Vedanta or something like that. They have been, because they are a portfolio of multiple metals. They are not one single metal company, right? And they have all the rare earths, everything with them. So it's not something that will be very cyclic. It goes on increasing, and these are like stocks which you should hold for a really long time, because they also give you dividend. So dividend is kind of a fixed salary for you, right? So every quarter, I used to receive dividend when I was in India. I still receive, but it's something, you receive dividends from these stocks, right? So it's something that is paying you, right? And creating wealth for you, at the same time giving you a capital appreciation. So since 2018, I focused on these three sectors, and I didn't diversify much. I just focused on few stocks, and I really went in for it. So I know this is not a move I ever recommend anybody to do unless you really understand the market. You need to you know, definitely take the risk, but at the same time be calculative about the industry that you're operating in. I don't claim to understand the telecom industry. I don't understand the airline, banking. I don't understand any of those industries. Okay, even I don't understand my own IT industry. I don't know why stocks go up and fall for maybe companies in operating in IT. I don't know why Infosys, TCS, or Wipro stocks are going up and down. I really have no clue. I don't understand why banking is going up and down. Banking is like, I feel one of the industries where it's very difficult to understand the bank, or I would say it's very difficult to understand what's going on within the bank. Maybe they may have some really bad debts or non-performing assets, right? NPAs. We don't know. I mean, we know it for up to certain extent, but we don't know what can go wrong with them, right? What can make them collapse? They are increasing, but there's at the same time, I don't, because I don't understand them to the level that I understand this other industry, so I try to avoid them, right? So if anyone is starting out, I would just say that when you start your investing, make sure that you're beating inflation first. That's the number one rule. And of course, you're protecting your capital, right? You don't want the stock to just fall randomly one day and you lose all your capital. So that's how my investing journey has been. I mean, from the start till how I matured in the process of investing and how I got into the sectors that I operate in. Definitely, I would love to operate in more sectors and have the knowledge base. And definitely, I try to do that. But I think if you can just begin with one or two sectors and just focus on the stocks or the companies operating in that sector, I think it's easier. For me, metals and oil was that sector which kind of gave me some better understanding about the industry, the oil industry as well as the metal industry. And I think I just focused on those 5, 6, 7, 8 stocks, and I think I got good returns over that. So this is how my journey has been. I mean, I did start with mutual funds, I did start with other things, but then I optimized myself to, if things are not working out, if I'm not happy with 10, 20% returns or 15% returns, I need better than that. I need 50, 60, 100% returns. So that is possible, but you need to have research on the industry that you're working in, and you need to really follow up with the stocks that you are actually investing in. So that's how
That's
it is.
amazing. It's a very interesting point because, like, often when we start our careers, the first advice we get to start investing is start an SIP or pick a mutual fund and
Mhm.
just start putting monthly money into it. And it's not often we realize what the mutual fund is actually holding, what the fund managers are actually doing when they sell a stock or when they buy a stock. And
Mhm.
it's actually important to go through that, like you said. But it's also important to know the amount of effort you put into study each sector, to understand the sector, understand the cycles. And if we do that, if we put in the right type of effort in the right sector or in the right stocks, it's very nice to know that we can expect profits like this. We can expect performance like this. And thank you for that. I would also like to talk about your exposure to global markets, like the US market, because the Indian market is one side of the thing, because a lot of people just stay stuck at Indian markets, study only the
Mhm.
stocks here. But it's also important to note the performance at a global level, to understand the performance in different countries, especially in countries like the US, and study their markets. So,
Mhm.
how did you start with the US markets, and what is your current situation?
So, US market has been a fairly new journey for me. I'm just a year old in the US market. I'm not very much been in the US market, but just in few stocks. But as much as I have experienced the US market over the last 1.5 year, 18 months, I would say, I felt that it's more or less similar to our Indian market from the principles the way we invest, right?
Mhm.
Um, the difference of the US market is like, it has, if you look at if you just remove the last few years, let's say last 3, 4 years from the US market, US market has been kind of stagnant. Okay. It
Mhm.
has not really given the kind of returns over last, like if you look at the returns over maybe last 10 years or 5 years, it has kind of been stagnant. If you look at just compare it with the Indian market, maybe if you look at the tech stocks, if you remove the technology stocks and just focus on the other market stocks, it has not. So what I understand, it's a bit of a mature market. It doesn't get spooked by some random events, right? The way our markets get spooked, right? Okay. So it is more fundamental driven, but recently also they are undergoing a transformation. Okay, because maybe they are getting funds across the world where so they are like, they are, I would say, losing their maturity. Okay. That's what I experienced, at least. And over the last few years, a few of the tech stocks have given incredible returns. Uh, it was something that we from India probably would have. known, but it was difficult for us to access that market. Maybe we didn't have the platforms. Now we definitely have some good platforms, but if you look at 10 years back, we didn't have, or maybe even 7 8 years back, or even before COVID, we didn't have the platforms, uh, uh, or even if the platforms were there, or the apps and whatever we have, it was not popularized between everybody, except maybe if you're working in IT, you have a better exposure of knowing that there is an app which helps you invest in the US market. But so I think, um, at least I did not know that there were apps available where you can actually invest in the US market and start trading there. And so my journey for investing in the US market mainly started once I moved to Dubai. That is 2024, 18 months back. It's been, so that's when I realized, because from Dubai at least I get exposure to almost every market, because the way the banking systems, the financial applications, the everything that has been designed, uh, if you live in Dubai and in the UAE, is that they are giving you access to everything. They are not restricted access. Like, you can move funds, you can trade in stocks in US, you can trade stocks in Europe, you can trade stocks in UAE, you can also trade with stocks in India, right? Sitting at here. So this is something I felt, the inclusiveness that you have from this market is something really incredible. So that's why I actually thought, I should actually diversify it beyond India. Again, since I'm a techie, I started with my tech stocks, the Magnificent Seven, the what do you call the FANG companies. That was my starting area, since I already had RSUs from Oracle, and I thought, I should diversify in stocks which other than Oracle, or others, not just. Uh, so that's when I started following up with maybe the Microsoft stock price, the Amazon, the Nvidia, maybe Tesla, and so I would say it's around a time when Donald Trump was just elected, and he was trying to push in the tariff laws and everything, like, and where market gets spooked whenever you speak about tariff, whenever the leaders speak about something like tariff, and there is something. There is also a growing thing, that a growing concern among the investors, there is a recession coming up. So this thing spook almost every market. No market is immune to this kind of things, right? So that's when market started actually dipping, and that's when I actually started buying more stock. Already I had built a small portfolio, but actually I started investing heavily around the time of March, April, May of 2025, when actually things were. So I think from a contrarian perspective, okay, I usually buy when everyone is selling, and I usually I try to sell when everyone is buying. Okay, this is a perspective I keep, and this is a perspective I even followed in the Indian market. Okay, this is not something different. So my learnings from my Indian equity trading has helped me with the US and other global tradings that I do. So that's where I actually, because contrarian approach definitely helps you. It Because you don't usually panic in that pressure. You actually enter at a right price. See, there is nothing like a right price, but you enter at a price fairly lower than what you could have when the stock was trading, or when it was rising, right? So I think that's a point where I entered into good stocks like Nvidia, in Tesla, in Microsoft, Meta. I bought all the Magnificent Seven, all the AI stocks mainly, and I kept them for a while. I started selling IBM. I started, as they started growing back up. People start buying when it started growing back up, right? And that's where I thought, okay, now it's giving me returns. I should now start selling them, and that's when I started selling them. Again, I then again, when it's falling again, I bought them. So this is a trading cycle. I think, I usually prefer holding stocks for long term, but especially for this kind of dips and ups and downs, this is where you can actually trade, and you can follow the contrarian approach. It really helps. Okay, but you need to I know it's like, it's again not for everybody. It's risky. You just miss one day, and things will go. Your portfolio will start looking red. So it's obviously not something I would ask in a new person who has no experience in stocks to do this. Definitely you need to, it takes time to build that contrarian approach, because it otherwise, you yourself get spooked. Oh, is it something I'm doing wrong, or is it something that I'm like, not in the right frame of mind? Okay, let's so you need to like be really mature enough to follow this kind of approach, because when the world is selling and you're buying, and when all your friends are like, hey, why are you buying? So, they'll just call you, are you crazy to buy all this? You must have seen our chat, since you're also part of our group we communicate on WhatsApp. I usually post, hey, I'm buying these shares, and how come you're buying now? So because I follow that contrarian approach, and right now I've kept my holding mainly for Nvidia, for Tesla. Rest of the stocks I keep on trading, but these are the stocks. At least Tesla has been giving me good returns. Nvidia has given me good returns. People say that Nvidia is really overvalued, or see, I feel that when it comes to valuation, if the earnings are backed by, if it has the earnings, if it has the things, then I feel it's not overvaluation. I think it's correctly valued. It's not a bubble, right? So companies like Nvidia, they do have really good backing. They really have the kind of earnings which they show. In fact, this quarter they reported the highest ever earnings, right, for their company. So I feel that this is not a bubble, right? And again, whether can they keep up with that earning is again a question mark, right? Whether they can double from this point is again a big question mark. Because see, if you look at geopolitics to a certain angle, right now they are trading everywhere except, I think, for China they have some issue, and China is a really big market for them. So if China opens up, they are expecting another $50 billion, $50+ billion of revenues. I think last figure I heard was 54 billion. See, already Nvidia has a revenue of 57 billion dollars. Just add $54 billion, so they are crossing almost like $110 billion of revenue. So if you look at this, there is a strong possibility it can double from this point, right? There is a strong possibility. It's not a bubble. But again, will geopolitics allow that? We don't know. Whether China or some other country can replicate their technology, or maybe bring up something else, and they lose their leadership position, we don't know. These are the uncertainties, right? So it's like, whether you want to, but I feel that it may. So that's the reason I keep on holding these stocks. If it's giving me returns, I keep on holding it, right? I will not just sell it just because it's not able to do it, right? So, but again, you have to keep these uncertainties in mind, and you have to exit at the right moment. And right moment, nobody can tell you. Even I may not know, right? But you need to have that. You need to follow the market, and you need to have that support group. Now, what I mean by a support group is like people who think like you, right? So when I was like working back in Oracle, we had this investing channel where, see, there were a few hundred people like talking on the same subject. So that's when I realized, okay, when you talk with the like-minded people who have idea about the industry, who are following topics the way you are following, who are kind of also having the depth of understanding that you are having, that becomes your own support group, right? So that's when I started, after I left Oracle, I wanted to be in touch with these people, and continue my US stock journey, and investing in Indian as well as US equities. So that's when I started interacting. More people joined out of interest, right? So that becomes your support group to help validate whether your thought process is right or not, right? See, if I'm doing something wrong, right, there should be somebody to say that. I will not know whether I'm doing something wrong, maybe when it comes to investing. So always have that support group, whether it's for investing, whether it's for some other things that you're doing in life, whether it's for maybe your education, your career. You should have that support group for you. You should know the right people to connect with, who can, maybe give you the heads up that, Raj, you're on the right track, or you're on the wrong track, or maybe something can go wrong, right? Maybe they think on something which maybe I have not thought of yet, right? Maybe they are seeing something that I have not seen that yet. So that support group for you is very much essential for anybody, I feel, because that validates your. That's why you will see that, I think you're also part of some of my support groups, as in my industry groups. You're part of my metal group. You must have seen. So there are some people who are only for metals. There are some people who are only for stocks. In India, stocks for US. So these are my support groups. Like, I kind of take help from them whenever I don't know things, and I claim I don't claim that I know everything. I do know few things, and but there are many things which even I may not know. So, but as a community, you may know, you are like a knowledge base for the larger community, right? You may know few things which the others may not know. So that's where you share things, you share your thoughts, you share your ideas, and then you get the confidence. Okay, I'm thinking in the right direction. I should hold this stock. I should not just simply sell it just because everybody is selling it. Just because it's falling, I will not sell it. Just because it's rising, I will not buy it, right? So there are some of those macros. So US stocks also work on those similar macros, right? So That's the reason right now I am holding Nvidia, I'm holding Tesla. I may buy a few other Magnificent Seven stocks depending on how they perform. I was thinking of buying Google, but recently I missed that wave. I was busy in some of my projects here, so I missed the wave of buying Google. Otherwise, Google has been really doing well and one of the major competitors for Nvidia. I think yesterday's discussion was also on the same topic, whether Google will be doing better or not, like than Nvidia. So this is how you follow the US stock market. And again, US stock market is really fundamental driven. I realized that over the last 1.5 year that I've been trading there. But at the same time, it's also going through a change. It's also going through level of, because there are a lot of new investors who are entering US market, because now they have also like opened up globally, where China, investors from India, investors from Middle East, everybody is like now trying to get into the US market, and trying to get, because everyone wants to be part of the AI wave, right? And again, this is the AI wave that is currently running, and that's driving these stocks. But uh, what I feel is, as we move, definitely there will be other waves. What I see is like there is definitely, as the quantum technology grows, there are only two companies in the quantum computing space right now. There is IBM and there is AMD, which is actually making quantum hardware. There is again a company called D-Wave or something. I think they are again a smaller company, but there are a few other companies who are actually creating some kind of a ripple effect in the quantum computing. Maybe in the next 5 years we'll come to know. So as you grow in any market, whether it's India or the US, you will basically have to turn around with your portfolio. Not every company which is performing now will also be performing future, right? Like if you look at back in the 90s, I speak with my seniors and mentors also. They say Cisco was one of the most valuable company, like Cisco systems, right? They used to build networks, everything. They were like in 99 they had reached their peak value, but after that they never reached that value. So people who invested in Cisco at some particular point, they never made that money back, right? So you should not be really emotional to particular stock. Even if you're working for that company, you should not be very emotional to that particular company, because otherwise you may not know that whether that company is at its peak, whether it's, you should take advice from your support group. You should understand that, hey, something is maybe not right, there are people maybe in your support group who are doing intraday, or who are understanding the graphs better than you, who can read the graphs better than you. Just reading a candle theory, I mean the candle graphs, right? You may not exactly see, the interpretation can vary, right? Like I was just speaking to another person here. Okay, his interpretation from the candle was slightly different than what other people are. So you should take all these interpretations into account. Maybe by reading the same graph, same from the same dashboard, some people may have a different interpretation. So when you discuss about that, you understand that, okay, this stock is it can go anyway, like so then you have to decide what you exactly want to do. Are you really, do you want to carry on with that risk? So, so US market has been interesting, and that's what I would say. And I've learned a lot from here as well, and I also made money from that as well. So, yeah, that's how it is.
Those are some amazing points, Raj. One thing I can't help but notice is that many people chase high-paying roles thinking money will create freedom. On the other hand, it's also important to note that just focusing on preserving your wealth or creating your wealth without increasing your income is also another trap that we don't want to fall into. From your experience, what actually creates the freedom? Like, is it income or skills or investing, or is it just the mindset?
So it's all of them to a certain point. I think that if you look at it from income perspective, definitely you should not chase income at a very early stage of your career. You should chase your skills. You should chase your developing your competencies, like what exactly is working out and well for you, and then you should try to optimize upon it. You should try to make that better. Just switching jobs without adding any new skills or competency doesn't really help. Actually, it does help you to get short-term gains. Maybe you are maybe just switching for a 30, 40, 50% hike, but maybe over a longer term you're still the same person which you were 5 years back or 6 years back. You're not really grown professionally. So I think maybe in your early years, maybe up to, if you're not more than 5 to 7 years of experience or within that, you should just stick to developing your competencies. Upskill yourself, learn as much as you can about technology, about business, about finance, about consulting, how these things bridge each other. Right? As I said, like consulting taught me how the industries work, which I think even finance and technology or engineering did not teach me. Right? I understood how that happens. So for freedom, like when you say like financial freedom, like even if you have 100 crores in your bank account, sometimes people think, oh, but your spending habits are not consistent with that 100 crores. You can, you just blow up that 100 crores within a year. Like, people do that. So again, it's again comes back to discipline. Are you really a person which who has a discipline to manage your wealth, who can invest, and maybe just take the right decisions to invest at the right time? Again, there is no right or wrong time, but right time for you, as I said, like, as a person, whether am I growing, am I actually putting in the effort to understand the trends in the market, right, and making that right switch. So that is actually what freedom is. And freedom is also about time. You should have the time to do it, not like your primary employment is draining you for 12 hours and you have no time, absolutely no time left for yourself. So these are the things actually which kind of matter. So you need to basically have time for yourself, have time to think about what can be there, like, be in the present, and don't like just keep daydreaming that, okay, I will have this, I will have that, without actually making the right actions, right? And then I feel, when it comes to, you should also developing, see, when it comes to discipline, it has to be, kept on consistent, not like, okay, I just did something for 15 days and I forgot about it, right? You have to develop that discipline over, like, for financial discipline, what I, at least for what I had followed, is like, I reconcile all my finances every Sunday. Like, after this call, I'm going to sit with my finances. I'm going to reconcile everything, whatever happened in the last 1 week. Because see, every day I may not get time to look at my financials, what stock market happened, or how much gains, notional gains. I mean, I not sold stocks, but what are the notional gains that I made, right? So I do it on a weekly basis, and this is a practice I've been following for the last 11 years. Yeah, seriously, right from 2014, I have been following this practice. I've been maintaining my sheets. My sheets are filled with every yearly charts, what exactly happened with my, well, because yeah, as I said, right, I got a bit disciplined with the financial literacy as I started working on projects, including financial projects, implementation projects, right? So at least for the last 11, 10 years, I have charts of my wealth, graphs, everything I keep on doing, on a weekly basis. And that way, actually, I know, understand whether I'm making money, I'm losing money from the markets, right? And this is consistently I've been doing. I didn't like take, even if I'm on a trip somewhere, I'm traveling somewhere, at least I have my phone around. I will just reconcile. There was a good app in between. I think it was a company called Perfios, a personal finance one stop. I think now I'm not sure if they are still existing. You know what they used to do? They used to give you a like a interface. You can click on that interface, and you can get your current status, like, your all your statements, all your maybe your current bank balance, your current stock market holding, your Bitcoin holding, your everything, whatever you're feeding, let it to feed, right? It will give you on a dashboard, and it will show you. So I had taken the subscription for a month just to see how they work, but it was a really beautiful software. I mean, just imagine, like, if you're a really busy person, you can actually do something like that. So I didn't rely on them, because again, I didn't know how safe they were when it comes to managing data, right? So then I tried to develop my own macros, where I'm trying to build some Excel formulas where it can fetch some details from the stock market, and I know how many stocks I'm holding, so I'll just put that in one Excel sheet, and it will multiply, and it'll show me a weekly record of what has happened with my current portfolio. So be disciplined enough to understand and track your own finances, track your own net worth. Are you losing money? Are you making money? And if you're making money, also you should decide that now whether you want to be invested in the market for the next 2 months, whether you want to be invested in the next 2 weeks, right? So if you can do that, actually you are, let the automation take in. Like, let's say you know that, okay, your profit has slightly dropped, you're still in profit, but your profit has slightly dropped. So do you want to be invested in this? So you can take that decision today and execute that over the next 1 week. You don't have to decide on the spot, oh, I have to, because when you're working, because see, our day's job is something else. It's not finance, it's not investing, it's we're not full-time traders, right, Sanjay? So we have to be mindful that our mind is also finite. We cannot make multiple decisions at the same time. So when we are at our and most of the markets are operating when we are at our day's job, right? So we may not get the time to make those live decisions, right? So you have to make those decisions over a weekend or something like that, and we decide, okay, regardless of whether the market goes in up and down, I'm going to buy more stocks. Regardless of whether the market falls or goes up, I'm going to sell this stock and exit the position, right? That decisions you have to make on a time when your mind is really free. It's really having the time, maybe on a Sunday or a Saturday, whichever day works for you. For me, Sunday works, so I usually sit for like just half an hour or 45 minutes. I just see whether what my positions are, which I can exit, which I can rebalance, which I can increase, right? So those decisions you have to make today, and then over a next 1 week or next 2 weeks, you have to execute those decisions, not decide at that point of time. So I think that's, but for that you need to have that free time. You need to get that free time, and you need to execute upon it. And this consistency I have developed over the last 10 years, at least 11 years I have been doing this, and I have refined that model much more, so that I'm better at making those decisions. And I've learned, and I try to refine it further. And then I create dashboards just to show my position, and just to see where I can actually fit in. So this is how anybody can do it for their own personal fun. It's not really difficult. Anybody can build it out. And I think that for freedom, you should also think when you have enough. See, we as people, we feel okay. Whether when we, let's say we have a lot of money, so what is financial freedom for you as a person? Is it just like you have money and you need time to work upon yourself, or you have time to work upon a few other things that interest you? For me, freedom is when I get time to work upon my interests. Like for me as a person, I feel that if I'm working on an idea which is my original idea, I feel that is a real freedom for me. So when the project like drone IO and things like this, when I thought about it, it really excited me. Okay, think, okay, this is the thing that I really need to work upon, and I really find that freedom. So as an entrepreneur, if you ask me, my freedom is, I'm, regardless of how much money I have or how much wealth I have, my freedom is really when I'm actually working on my own idea, rather than doing some other day job or some other project given to me by some other company, right? Like that. So that's when I really find the freedom, and I feel okay, this is where I'm actually excelling in my overall well-being, or overall in a holistic way, right? That's how I feel. I mean,
That's amazing, Raj. Thank you for all these points that you put forward. And some of them are really, like, most of them are extremely useful and something that all of us have to think about.
hmm
And this whole conversation really shows that growth isn't about doing one thing fast. It's about doing the right things consistently and having the hunger to always strive for more and working on it. Thank you for sharing your journey and your insights throughout all this. It's a truly amazing and beautiful journey, and I think everyone should use this as inspiration to construct their own journey. Thank you, Raj. And do you have any things to say about this?
uh thanks a lot, thanks for having me here. I'm really excited to see how this comes out. And it's really been great talking to you. Also, we have been communicating over the past few days. I think when since we have been starting talking on various topics on
Mm.
stocks, metals, and everything. But yeah, I think this has been one of the good conversations and sessions for me as well. So thanks a lot, and I hope this helps youngsters who are coming up, who are in their early 20s, or who are risk takers, who want to like really try out their ideas. This is the only message I can give, is like, take risks as much as you're young. Take risks. Don't just be, try as much things as you can. See what works out well for you guys. And whatever you make in your 20s, even if you lose it all, you can still make it up. So you should always take massive risks in your early 20s, or as you are, try out your ideas, work upon them and be disciplined. And all, of course, take care of your health. It's something I always tell my younger generation, look after your health, work out regularly, so that is something I hope everyone works upon this. And that's the closing message I can give.
Thank you, Raj. Thank you. And thank you, everyone, for watching this episode. I hope you found this as useful as I find it. And thank you again, and see you in the next episode.
Thank you very much. Thank you all.